and good evening, traders and aspiring traders. Welcome to another episode of Trade Breakdowns. So, in this particular video, I will be covering how I traded the last week of September. So, in this last week of September, I only took one trade, which was on Friday. On Monday, Tuesday, and Wednesday, I was not actively trading, I was managing my swing positions. I have not done the trade breakdown of that video because it was a swing trade, so and I was quite busy those few days, so I did not cover it. But it was shared on my socials, so if you have any question about it, you can just reach out. So let's cover how I actually traded on Friday. The trade was a loss, but that is part of the game. So this is how I had analyzed the trade, top-down analysis from the daily chart to the 5-minute chart, which was my entry. So let's look at it. So this analysis actually started on Thursday, and I was on YouTube live. I did my daily outlook on Thursday, and the setup that I was expecting to form on Thursday did not form on Thursday. It formed on Friday. So that is what I will be covering. So let's start from Thursday. I'll just do a quick recap of what I had talked about on Thursday. So if you watched that video, you remember that I said that Wednesday's candle, this was Wednesday's candle, it had not closed below this last up close candle. So what I expected to see on Thursday is a reversal, or yes, a reversal from this retracement, which I termed as retracement. So I wanted to see price return to bullish price action. Okay, you can find all that the daily outlook on Thursday. You can find it on my outlooks playlist. You can just check it out. So on Thursday, that did not happen. As you can see, price traded lower, and then we came to Friday. So I want you to assume that this candle has not printed this bullish candle. I want you to assume that this candle has not printed. So you remember that I had mentioned that what Tuesday printed and what Wednesday printed was a retracement that actually retested this this zone, which was where the change in state of delivery had occurred on a daily level. So once we retested that on Wednesday, what I wanted to see was a reversal in price to the upside. So Thursday came, it swept the previous day low, which is very valid. That is what ideally we want to see if we are going to have a Thursday reversal or some sort of midweek reversal. You want to see a run on maybe the previous day low, which is an important sell liquidity. You want to see that being swept, and then you want to see price change in state to bullish price action. Okay, so on Thursday, this was Thursday's candle. Thursday did not give me that. Thursday swept the previous day low and it kept trading lower, but something very interesting happened, and that is where I got my bullish bias from. So as an ICT trader, we tend to study the candles and what they did, so in relation to the previous days, the previous weeks, the previous hour, and so forth and so forth. So on this particular chart, a daily chart, what I noticed is that the daily Thursday's daily candle swept this low, but it closed above Wednesday's range. Okay, so as much as I never got a bullish entry on that day, this was a confirmation that at some point we will get some bullish price action, which is what I was expecting. So this occurred on both US 100 and US 5. No. It occurred on US 100 only. It did not occur on US 500, which is SP 500. And I will talk about that in more detail as I narrow down to the lower time frames, because it formed some a very important SMT divergence, which was a very crucial part of my analysis and part of my setup. The setup which I still believe is very valid. It's just that I think the monthly candle is already exhausted, and what we were observing is that close of a bullish candle, because you remember in one of my videos I talked about how a bullish candle forms is that we get an open, price will rally lower, and then we will expand higher, and then we'll come back to close. Okay, so that is what we call the OLHC, open, low, high, and close. Okay, so that is how a typical bullish candle forms. Okay, so this was very typical of the in the sense that it is within the monthly candle. So this is what we call the close, because the monthly candle had already expanded upwards over the past few weeks, because this is 1st September right here. So let us just look at it. This is 1st September right here. What did we get? Okay, let me just mark it with a vertical line so that it is better. So this was 1st of September. What did we get? We get that rally to the downside. So that is the L part of that OLHC. So let me just type it out so that it's clear enough, so that as I speak over it, you can see it. So it is the open, we get the low, we get a high, then we get a close, OLHC. So in that sense, what we have here is the open, we have the low right here, which occurred on 2nd of September, and then we have this rally. So that is the high part of this monthly candle, bullish monthly candle formation. This is the rally to the upside, this is the monthly expansion, and then we have this close. So typically this is how candles form on all levels, from the monthly candle to the daily candle to the hourly candle, the 4-hour candle. A typical bullish candle will follow this protocol: open, low, high, close. And then a bearish candle will have an open, a high, and then it will form a low, and then a close. Okay, so it is the vice versa of this. We get an open, we get a high, and then we get a low, and then a retracement back inside to close. So it will not always be this or this, but this is how a typical candle forms: a bearish one and a bullish one. So let's go back to our analysis. Okay, so on this whole retracement, looking back in hindsight, I was kind of deluded, and I didn't put much thought into it. So I should have noticed that this is that part of that bullish monthly candle. So we are in that last stage of delivery, which is the close. So back to what I was saying is that on US 500 we swept that and closed below, but on US 100 we did not. When we go down to the lower time frames, you will see why I did not take this as as an inconsistency between the two correlated pairs. Rather, I viewed it as more confluence to take the trade that I took. So I think we are done with the daily candle, the daily chart, I mean. So we can go down to the 4 hour. So as you can see, I was bullish going into Friday after this price action and that price action on SP 500. Sorry about that. Okay, so let's go down to the 1 hour candle because I want to go direct to subdividing my chart into the daily levels and so forth. So as usual, this is what I do. So I will only mark Thursday and Friday because, as I have said, those were the only 2 days that I traded because I was managing some swing position on Monday, Tuesday, and Wednesday. So let me do the same on SP 500. We'll go to the 1 hour chart and I will do the same thing. I hope that you are noticing how I follow the time frames. I do not just jump from one time frame to another randomly, because if you are an intraday trader, not a high frequency trader, if you are an intraday trader, you are trying to catch the bulk of the daily move or maybe the weekly move, you need to be organized that way. You need to follow some form of protocol. So I'll just mark Thursday on the same. So this is the price action that I'm talking about. What we have marked here is Wednesday's low. I think I should label it so that we don't get confused. I don't know if we will use it, but let me just label it. If it becomes unnecessary, I'll just delete it. Wednesday's low. Okay, so I'll just copy this. Okay, Wednesday's. Remember, that is the level that on the daily chart I have explained I was really looking to see some form of reversal after this sweep on Wednesday's low. So after this, I wanted to see some form of change in state of delivery. So on Thursday, as I had explained, I wanted to see some change in state of delivery at this level right here, because this was the last done close candle, or this is the set of candles that was responsible for this sweep. So I expected to see some form of change in state at this level, which did not occur. As you can see, price continued to rally lower. It reached some important levels. Don't know if I should talk about those in this video, but we had some fair value gaps here and a change in state here that had occurred on FOMC on Wednesday 17th September. I think I actually talked about this in the Thursday's daily outlook, but let me just mention it. We had these levels right here, the change in state that had occurred after FOMC Wednesday on Wednesday 17th September. So price retested those levels right here on Thursday, and since I had not gotten any change in state of delivery, I did not take any trades on Thursday. So I carried that whole idea on to Friday because it was not invalidated at any point. Because if I'm looking to trade higher and I have not gotten that move, I do not change my bias and start trading the lower move. What I do is I wait for my point of validation. If not, I wait for the next day. So that is what I did. So let us look at Friday's price action, which I actually traded on Friday AM session. So I don't know. Maybe I should go to the 5 minute. The 30 minute. Sorry, not the 5 minute, because there are some levels that I want us to observe better from that view. So let's see what the 30 minute showed me. All right. So before I even actually looked at what Friday had printed before the 7 a.m. session, I was very interested in how Thursday printed. So as I was going through Thursday's price action, what I noted was these two lows, this a higher low on Nasdaq. So this was a PM session, and this was the AM session low. So I want you to notice that this was the previous day high, previous day low. I'm sorry, that was the previous day low on Nasdaq. So let's go to SP 500. This was my previous day low. So you will notice that the previous day low formed uh, at 2 p.m. New York time on SP 500, while the Thursday's low on Nasdaq formed in the AM session at 9:30 a.m. New York time. So I think you already know what I'm about to label. This becomes an SMT, a bullish SMT, because one asset has cracked the correlation. One asset has shown us the willingness of price to move higher and trade higher throughout maybe the next few hours, or probably the rest of the week. So once I noted that, as I have said, I never traded on Thursday. So I just tape reading, I noted that the SMT, the previous day low, had an SMT between the two. So now let's get into Friday. So Friday opens right here, forms this low at 1:30, I think, and then it continues to trade higher. So as you know, I never trade anytime before the 9:30 open, as usual. So at that moment, I'm just observing price, right? So I come and notice that on Nasdaq, price opened the same thing that we have observed on SP 500, traded higher, then traded lower, and at around 5 a.m., which is within the what do we call it? The London kill zone, price swept this low. You see, you can notice that price swept that low on Nasdaq. When I went to SP 500, price had not swept that low. So the current daily low was still holding price on SP 500, right? So as usual, so again, you know what I will mark this as. This is my SMT, while a higher low has been formed on SP 500. So that is my SMT. Let me just make this a little bit bigger. So I hope it is visible enough at that point. All right. So now going into 8:30 open and the 9:30 open, that is what I was looking at. So on Friday we had news at 8:30, right? I think we had a high impact news at 8:30, Let me just check. um, just a minute, so I'm confirming. So that was September 26th, 2025. Yes, during the 8:30 open, we had core PCE price index. Yes, it was a high impact news. So I was expecting some form of, probably some form of manipulation, but I was also expecting this SMT to be respected, uh, because an SMT simply is, uh, it's like a cheat code. Uh, you are getting a hint that price is willing or is ready to start moving to uh, the side that the SMT is showing. So in this particular case, it was a bullish SMT. So, and the the stronger pair in terms of bullishness was SP 500. So I was looking to take that trade on ES, US 500 or SP 500, whatever you call it is fine. So once I had this, waiting for the 8:30 open, what I was waiting for was the confirmation that, so once I mark an SMT, so going into 8:30 and 9:30 open, I marked this as my last set of down close candle. So that is where I expected to see my change in state of delivery, and that is where I was willing to enter the trade once the news release was over, and once the 9:30 opening bell was rung. So from that perspective, now I am ready to go down to the lower time frames to wait for my entry, and maybe to wait for my entry, which will be after 9:30 open. So let's go down to the 15 minute, or maybe I should even go to the 5 minute already. Let me just go to the 5 minute. 5 minute, 5 minute. I don't know. Let's use the 15 minute for now. Okay, let's use the 15 minute. I think I'll be able to explain this better from a 15-minute chart. Okay, so remember, uh, none of this price action has occurred as I'm marking out these levels, right? So the 8:30 open, uh, we have this bullish candle that actually confirmed this change in state of delivery, but I do not take any trades before the 9:30 open. So as much as this is a confirmed change in state, I couldn't have taken that trade because I am waiting for the 9:30 open, because that is how we trade. I think that's, you should expect some form of manipulation during the 9:30 open. So there is no way you are entering a trade before the 9:30 open, because it might be invalid. It might be temporarily invalidated during the 9:30 open manipulation. Okay, so to be safe, and from uh, the people I've learned this from, we always wait for futures. We always wait for the 9:30 open. So I waited for the 9:30 open, and 9:30 open was, it clearly manipulated. There was some form of manipulation to the downside, and that is what you observe on this week. I don't know how I will mark that. So this is the 9:30 open. So remember, we have this confirmed change in state, but our time has not it's not 9:30 yet, so no trades. So at 9:30 price wicked lower, it also wicked upside, but this was my focus. And remember, I am looking for this trade um, on SP 500, right? So that was 9:30 candle, 15-minute chart. Okay, so once 9:30 did this and it traded higher, it rallied even higher and confirmed now another change in state of delivery. So first of all, let us mark this as our first change in state of delivery. But as much as it is a change in state of delivery, it was premature because we have not seen what the 9:30 open will do. So 9:30 came, confirmed. This is a retracement. You can see we had this change in state of delivery to the upside. Price retraced, then price confirmed that change in state of delivery once more here, because let me just use an arc. So remember, all I am waiting for during this time is time, because I have already seen what price has done. I have already marked this as my change in state of delivery. So we had this retracement. This is what I have marked with this arc, and then price confirmed that change in state of delivery. So this was a confirmation for my entry, and it's already after 9:30, so it's safe for me to take that trade. All right, so I think I should go to the 5 minutes so that I can show you my entry and how I took that entry. So notice that we have this fair value gap right here, which actually pumped that price to the upside, right? Which confirmed this change in state of delivery. I have not marked it. Let me just mark it. Change in state. I will also mark this arc as a retracement into this major change in state of delivery. So I hope I have that. Just a minute. Retracement leg. Yes, so that was my retracement leg. The arc represents the retracement leg. So once we broke out of that retracement leg and it's already after 9:30, that entry is confirmed. Okay, so this is where I took the entry after this confirmed this confirmed change in state of delivery. That is where I took the trade. Let's just go back to the 5 minute. I'm looking at the screen so that I can tell you immediately where I took that trade. It was at 66.47. 66.47. Where's that? Let me go to the 1 minute, because once you have all the levels and all your confluences matching, you can go, you are allowed to go back to the lower time frames to take your entries. I took that trade after this close. I'm pretty sure about that. 66.4. Yes, 66. That is about right. So where was my stop loss? Remember, at 9:30 we already had this we had this retracement leg finish, and it rebalanced this fair value gap right here. So that is where I put my stop loss on the 9:30 a.m. low, the low that formed during the 9:30 open. That is where I placed my stop loss. And I have not talked about the targets, so I think that is where we will go right now. So that was my stop loss. So let's look at what I was targeting to the upside. So to start with, there were very interesting relative equal highs right here, right here, relative equal highs. We had those right there, and then a very good target if you're targeting longs or shorts is the previous day low or the previous day high respectively. So in this case, since I was taking a long trade, I wanted to see this being swept the previous day high and then further, which was this was actually what I wanted to get from this trade. I wanted to get the relative equal highs, which I think they were Wednesday's highs on US 500. So I've already explained why I took the trade on ES or SP 500 because it was the stronger pair in terms of bullishness, because as you can see it did not sweep its original low after the midnight open and so forth and so forth. So the trade did not go out as expected, as price it was actually a very choppy day, but that is fine. So I was stopped out almost immediately. Yes, because I got in the trade at around 9:50, 9:45, around there, and I was stopped out at 10:20. So that is around 35 minutes, 30 to 40 minutes. I was already stopped out, and since it was on a Friday and I wasn't looking to be very aggressive, I I I'm sure I'm usually not that aggressive with my trades towards the end of the week, especially on a Friday, and that is when it actually hit me that that week's price action was actually some sort of exhausted. So I I did not take any other entry on that day. So yes, I thought I had something more to say, but I think that is all for the trade breakdown. I did not take any other trade because it's a Friday and so forth and so forth. I only tape red price, but the session ended at around 12 a.m. New York time. In the PM session, I was not actively involved. I only checked the charts once or twice. So that is how I actually traded the last week of September. A small loss because my first entry was there, and I was planning to add more entries as price pulled higher or so, but it did not. So it was just a small loss, part of the game. And yeah, that is how I traded uh, Fridays or the last week of September. So I have been thinking to myself, what if I had set this stop loss on this original daily low or the low that I'd held? But it wouldn't have made sense in terms of risk to reward ratio, because if I bring it lower, it becomes more of a 0.5 uh, RR, which means I will be risking so much more than what I'm gaining on that trade, which is not advisable in any case, because as a trader, what you really need to know is how to manage your risk. You do not over leverage, you do not over risk, because you need to live to fight another day. That is what I usually say. So I guess that's it. I'm not looking to trade on Tuesday or on Monday on Tuesday, because I honestly think the monthly candle is exhausted, as I have explained as on the first few minutes, the OLHC stuff and OHLC stuff. So I think this candle is exhausted, so I'll just wait for October. I mean, just wait for October and see what it does. I'm planning to do a video on my what I'm planning to do a video on the trades that I have taken the whole month of August. So it will not actually be a technical analysis video. It will be more of a video to explain to beginners or just fellow traders, because we are here to help each other grow. So not necessarily for beginners, but I will be posting a video on how what I made in September in percentage. So watch out for that. Probably I'll do it tomorrow. I'll find some time to do it tomorrow, because the last few months have been very eye-opening for me. I have been taking less trades, and less is more. So less is more. I have taken around four trades or three trades. I've taken around 4 trades in the month of September, and I've only had this one loss on US 500. So I think I've taken 4 trades, but I will check. So considering I've only lost 1 trade and I've taken 4 trades, so 3 trades were profit, and assuming I was making 2% on each trade, so it means that I have made 6% in 1 month. So basically what I'm trying to say, or what I will be trying to say in that video, is that you do not need to be a high frequency trader. You do not need to be a scalper. You just need to find the right moves for you and capitalize on that, on them and on those, because I actually believe that less is more, and I have seen it in my results. I have seen it. So yeah, I'm starting to talk about that other video in this video, so let me just end it here. Thank you for tuning in. If you haven't subscribed to this YouTube channel, kindly subscribe for more of such videos. Watch out for that other video that I will maybe post tomorrow. Yeah, thank you for tuning in. See you on the next video.